Good Wednesday morning, Market Chameleons, and everyone join us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. Provide you with guidance to help you, give you, personal advice if you need it. So that's the RIA, your broker. There's the disclaimer. And let me share my screen. Well, while I'm doing that, quick note, if you're joining us for the first time, Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you'd like to come on the show and ask your question live, we do provide a link to Zoom to, I think you have some background noise there, Will. We do provide a link there to Zoom. If you click on that link, it's in the live chat. It takes you over to Zoom. Once you get into Zoom, there's a button, raise your hand. Click on that. You could ask your question directly. If you prefer to type your question in, you could type it into the live chat on YouTube. Will's watching it. He'll read them back to me. So while we're waiting for more people to join us and for anyone for questions to come in, we'll start out taking a look at the pre-market report, see if we could get some insights on what's going on in pre-market hours, and then we'll move on to the questions. Okay, so pre-market report. These are stocks trading in pre-market hours. I'm going to scroll down here, and we have a list of our most active stocks in the pre-market, the biggest percentage gainers, biggest percentage decliners. Here I see 29 stocks made our percentage gainers list, 44 in the decliners. So from this perspective, right now we're looking like we're setting up for more bearish bias at the open. If we scroll up here, we do have this calendar view, which allows us to go back in time and see what happened in the pre-market hours historically. From a high level, right now we're on August 16th. So you can see so far today, there are 361 stocks that are trading higher in the pre-market hours, 316 stocks trading lower. As far as volume of shares, we got 316 million shares that are trading on up volume versus 472 million on down volume. And if we convert those shares to dollar value, we have $1.1 billion trading on up volume versus 1.9 billion on down volume. So that's a little bit of a mixed, I would say, bag there. We do have more stocks and shares that are up, but if we, as far as dollar volume, where if we convert the shares times the price, because not every price of a stock is the same, it looks bearish. So, I would say that's kind of mixed there. Another thing we could do is come down here back to our list. And when we look closer, we see that there are stocks in there that are low cap stocks, ETFs, leverage products. So anything that's traded on a major US exchange, if it is trading in the pre-market hours and meets our thresholds of volume, price, liquidity, it can make this list. And to narrow down this list, we could use the filters here above. If you have a watch list, you could filter by your watch list. I'm going to use this one in ETF, drop it down, and I have a list of ETFs to choose from. So I'm going to pick the top one, SPY, and we'll click on that. The list below, will get filtered by stocks that are holdings in SPY, right? These are the ones trading in pre-market hours. Here we see 5 stocks made our percentage gainers list, 2 on the decliners. So from that perspective, maybe even slightly more bullish bias, although it's a little bit mixed bag there. Because there's not a lot of stocks there. Looks like Target up in the pre-market hours, made the top of our list, and that reported earnings today before the market opened. And then over here we see what is that? Agilent down, that reported earnings. So that's really quickly a few insights of what's going on in pre-market hours. Doesn't look like we're, really bearish or bullish sentiment, overwhelming, kind of mixed bag today. So if you're ready, Will, or if you have questions, I'll take some questions now.
Interestingly, the only question, and I'm sending them to the video that's popped up, was Rob was asking, and I thought Rob was maybe on the show yesterday when you were talking. Someone brought up the Michael Burry positions in the puts.
Yeah.
They were talking about him again today in discussion.
Okay.
And yeah, I mean, I'm pretty sure we discussed those puts yesterday, right? We couldn't, from what we were given, and we haven't, just full disclosure, Dimitri and I haven't looked into it at all. So we were given the strike from the Chameleon who asked the question yesterday. I forget who it was. We couldn't even come up with the notional value. Like Sarush is saying it's $1.6 billion. We could not find that in the puts that were described to us. If anyone knows what puts they are in either QQQ or SPY, that would be the only way for D to take a look at it. But the ones we looked at yesterday, I put the video in the link. It was a good discussion because there was a dynamic to those puts where those probably, if you wanted to buy a put, those weren't the puts to buy, is what was discussed on yesterday's show.
Right, because of the carry costs.
Because of the carry cost, yeah.
Right, because we looked at the puts that were way deep in the money, and if you wanted to establish a short, they're in SPY. There's better ways to do that, because what we saw was that the puts that had the open interest were a early exercise candidate, right? So that's what we discussed, that those really deep in the monies were early exercise candidate. And if you wanted to carry a short, there are better ways to do it than the puts that we referenced yesterday. As far as like $1.6 billion, I mean, I read something, I don't know which puts they're referencing or where they're seeing, that seems like a very large.
Yeah, Ron just chimed in. He's like, if D goes to the screener and looks at SPY floor trades every day, someone is buying the 720 puts. And Dimitri also talked about that yesterday. Because there's this carry cost, market makers on the floor who also do these dividend spreads, which we've talked about before, are taking advantage of the person which we're assuming is Michael Burry. We don't know for sure. Whoever owns these deep puts is losing interest, right? So market makers on the floor are taking advantage of those puts not being exercised and going out and trading with each other to try to, put on a position. Correct, D?
Exactly. So I think, was it here? Let me look at the open interest here. Was it on this? Wait, which expiration was it?
I think it was the 24 720 puts. My record. I mean, Ron mentions the 720 puts. I think it was the 24, January 24.
Right. So you see here, this is, look, when you're seeing these trades, a lot of people are assuming the trade is doing something. And, you have to look deeper into it. This 626 is not somebody establishing a short or long. Okay. They're taking advantage of this open interest over here, 88. So you could see here, like between 720, right? Look at this between 720, here you get it popped up another open interest. But you don't see any open interest, right? Like look at all these strikes, look at all these puts, right? Zero open interest, 0, 0, 0, 0, 0, 0, right? But why is that the case? It doesn't mean that there's never any trades in there or people establish. The reason is because all these puts are an early exercise candidate, meaning that the most rational thing the person who owns these puts can do is to exercise the puts. Okay, that's the most rational thing. It's not economically rational to hold on to those puts, right? So this here is somebody's making a mistake by holding on to those puts because it's not rational to do that. Okay. If you understand why, if you don't understand, I don't have enough time for it, but it has to do with the cost of carry. Okay.
And again, yesterday, and I put the link in yesterday, we talked about it basically for the whole show. So it was discussed and you did discuss it. So,
yeah. And when somebody spots that, right? When somebody spots that, especially this is a market maker or a hedge fund that has special privileges that can do a trade. Two people could do a trade that it's basically a wash sale, right? That's what it is. It's a wash sale because one trader is buying it from another trader and then they're buying it and selling it back to the other and doing an exercise. And what they're trying to do is establish a position where they're short this put and short stock at the same time. And that is to earn interest. All right. I'm not going to map it out completely, but this 626 has nothing to do with somebody trying to everyday short the market by buying puts. We could tell this because the open interest would increase, right? Like this open interest would start to increase, but it's not. Let me see if I could pop this open and maybe show you guys what's going on. This whole thing though has to do, mine is a little bit slower because I have like test code in there with other things. So let me see if it'll load up. Let's give it a second, but I do have a test code in here that is slowing my thing down. But when you look at it, and this is this will be the problem from inexperience or not looking all the way through the trade and seeing what's going on, is that what's happening in that trade is it's specifically trying to exploit. Okay, it's specifically trying to exploit this open interest. That's what's happened. Okay, so all this stuff, that's what they're trying to do, is exploit this open interest. Okay, so let's see if I could track this and show you guys what's happening. So here's the put, right? Here's the put, and look, every day, right, we're seeing volume in this. Somebody's trading volume every single day, like somebody said, right? But the open interest remains the same, right? Every day, the open interest doesn't change, meaning that the positions that people have open does not change. See, it starts at 88, July 26th, and August 15th goes to 88. So it's always the same open interest. But look at all these trades. You got 800, 500, 500, 520, 700, 500. So why is that? Why is that happening? Obviously, if you want to get short the market and buy a put, if that's your intent, then you're going to buy it and you're going to hold it, and we should see the open interest climbing, but we don't, right? You don't see that here. It's always 88 day. And that's because this here is an early exercise. Somebody's risk management system is not picking up on it, right? So there's somebody out there holding these early exercise candidate puts, and it's, even though it's irrational, the most rational thing you could do is exercise those puts. Okay. They're not doing it. And then another system that's detecting a mistake in the market and, a miss, somebody missing something, missed opportunity, is trading in a way to exploit that issue. Okay. So don't look at this as that, oh, somebody every day is, trying to get short the market by whatever 1 billion or whatever. Whoever is saying that, and if you look at this data, then they don't understand it. Okay. Right. Because if somebody was constantly buying 500 puts every day, right? If you're buying 500 puts, 500 puts, 500 puts, well, the open interest should be climbing, right? It should be climbing every day, but it's not happening. That's because that trade is immediately after somebody's trading it, they exercise those puts immediately, trying to siphon off that open interest. And that's what's going on.
So I just looked at the 13F filing, and there's no all it says is a position and a put. They don't list a strike or anything. So that assumption must have been made yesterday, just based on the fact that these puts are there and people are trading them. So it looks odd, right?
Right.
So someone thought maybe that was,
he
probably is, those aren't the puts. I don't think he's obviously.
Like if I came into
the open interest, though, we know just because the open interest doesn't equal the notional value of the position. It shows what the notional value is. It's large. I mean, he's basically, if you look at his filing, he's long market in a lot of different stocks, right? So he's hedging himself with these positions.
Yeah, exactly.
What he's doing.
So what's happening is that maybe somebody's looking at this notional value, right? And that's what they're doing, saying, well, look at this notional value, and they're assuming that that's, establishing some kind of short or whatever, but that's not what's happening. They're doing a larger size trade to be able to, this could be two competing. This here could be two different competing market makers from one day to the next day, trying to siphon off the open interest. And they're doing it large enough to try to get the entire 88 into their position. Yeah. So I don't know why they did 520 and then 700 here, 600, I don't know, but, or they maybe from regulators, they don't want to create alarms that they're just keep doing this. But basically, this is just to exploit that open interest. And, maybe people are calculating the notional off the trade itself, right? Is that what's happening? I could take.
You know what? After I'll share the filing with you. I'm wrong. It does show the percent, and it looks like it is. He's put on a big short in the market using QQQ and SPY puts. So,
okay, and gives you the actual put.
It gives you actually the percent. I just saw a lot of positions, but it then shows the percent, and 51% of his portfolio is in an SPY put, and 43% of his portfolio is in a QQQ put, from what I'm seeing on the filing.
Okay, and does it tell you the actual put?
It does not. That's what I'm saying.
Okay.
It gives you a CUSIP, but I don't know, with the CUSIP, can we get the actual put?
I mean, I'd have to look it up. I don't have it.
Yeah, I'll share it with you. We'll look into it a little bit, see if we can find out any more.
Right.
Talked about it enough for sure.
Yeah. But
and again, I mean, he made a great call in the housing crisis. The number of people have made great, and they talk about him every time he puts on a position, right?
Yeah.
He's been wrong way more than he's been right. Not that the market won't go down. I can't say that, but
Right.
He's made a name for himself, which with a great one great trade in the housing crisis. And, 20 years later, he's still, brought up every time his position looks outsized.
Right. Well, and I would be surprised if this is his put just because,
Nah, it's definitely not that put.
Yeah.
It doesn't have the notional. Well, he may be all, he may be at different month. I mean, he could be at different months.
Yeah. Yeah. I'd be surprised just because he's very analytical. He understands derivatives, and it would be very surprising to me if he's sitting on this particular put, because, he could be short, have the same risk profile, and not have to be, paying this cost of carry every day unnecessarily, right? So this is an unnecessary fee you would be paying to stay short, which wouldn't make any sense from an economic perspective. It wouldn't make any sense. And I don't think he's a stranger to derivatives, and I don't think that he would miss this,
No, he was trading derivatives that were, almost unquantifiable at the time, right? Like people didn't even know about him.
He was trading credit default swaps. So if you could use a credit default swap, then this is a no-brainer to somebody like him. So I would be surprised if he's sitting on you never know, but I would be shocked to learn that he's sitting on a put on this particular one, because I don't see any. It's one thing maybe if SPY was hard to borrow or had a corporate action, but that's not, in SPY, this isn't the case. So that it would be very surprising to me that that's his put. But maybe, maybe in the SEC filings, I don't know, maybe they have a list of, you could probably find it. It would just be shocking to me that this would be it. But all right, well, I mean, I guess if we don't have any questions, any other questions, I'll just leave it here because we only have a couple minutes left.
All right. Does anyone have any other questions? Let me go. Robert's asking, I should have asked, is the person buying the puts different from another trader exercising puts to keep open interest the same?
Yeah. So this is what ideally you would want to do. As a market maker, okay, you can't do this as a retail investor because you don't have the same privilege, okay? But if you, for example, if you could buy and sell the same option on the same day, right? So you bought it and sold it. It's a wash sale, right? So think of it that way. Well, if you could exercise your long, all right, you exercise your long, where you're basically, once you exercise it, you get short the stock. All right. Now, on your short, if you get a sign at an exactly the same amount, then it's a wash. Nothing happened. Right. So basically, you bought an option and you sold the same exact option, and you exercised it. Now, remember, you can't do this as a retail investor, right? But as a market maker, they can. He exercised one side, the option that he bought, even though he sold it. As a market maker, he could do this, okay? Even though he sold it back out, he could still put in an exercise. So what will happen is he shorted the stock on his long. And the idea is on his short, if he gets a sign, because if the person is acting rational, the other side will also exercise. He'll get a sign for the same exact amount, and he'll end up buying and selling the stock, and washing out, right? So at break even, minus the commissions. But if somebody forgets to exercise, right? Like, let's say you exercised yours, you're short, and the person on the other side forgot to exercise. So what will happen is you come in, short the stock, right? You're short the stock, but you're also short the put, right? That's what ideally you're trying to do. Now, if you're short the stock and you're short the put, well, in this situation, you're hedged off, right? Because if the stock goes up $1, you're going to lose $1 on your short, but you'll make up $1 in the deep in the money put. If the stock goes down $1, you're going to make $1 on your short, and you're going to lose $1 on your deep in the money put. So now you're hedged direction, right? You don't have any vega risk theta. There's no time premium in this. There's no time premium. So why would you want that position, right? What's the whole purpose? Well, think about it. You're going to be short the stock and the put that adds up to $720, right? Because you're short the put at 276, you're short the stock, whatever this is. So it adds up to $720. So for each, right? So what is that for each for each put, right? You got 720, times 100. So that's you're short 70. So $72,000 comes into your account. Now you have 72,000 for each put times 88, let's say. So you got $6.3 million right now sitting in your account, right? Let's say you got all 88. So you got $6.3 million all of a sudden sitting in your account, and you're hedged, right? The stock goes up, you're hedged. The stock goes down, you're hedged, but you still have $6.3 million sitting in your account. So market goes up, it goes down, you're breaking even. But what happens is if you have $6.3 million sitting in your account, well, if your broker is paying you an interest, then you're earning interest on 6.3 million, right? So now you're earning interest on 6.3 million. So let's say at 5.4%, right? Let's say you could buy treasury, right? You take that 6.3 million, buy treasury at 5.4%. Well, that's $342,000 per year in interest, right? So if you could carry, now obviously you don't have a year to go. You have whatever 100. So what is it till January? This is business days, but you have calendar days. So whatever it is till January 24th, right? You might make 80,000, 90,000, 100,000, whatever it is in interest you're going to make in your position, just sitting on it, right? You don't have directional risk anymore, right? The stock goes up, you're offset. Stock goes down, you're offset, and that's what's happening there. So you can imagine, whoever's doing this all over the place. This isn't the only one. What they're doing is exploiting somebody's weakness in their risk management system.
And it's more relevant right now because the interest rates are higher. So
exactly, because
when interest rates were near zero, these type of trades, may not have been going on. But they're guys scrolling the world of options. And when I say God, they're market makers on the floors, because you got to have that market maker margin and that ability to trade and have the cost of your trades capped, right, to make it worthwhile.
Exactly. Yeah. So that's what's happening with with that particular trade.
And this is why when you see deep things trading and lots of trades, it doesn't necessarily mean it. You have to understand why they're trading.
You have to understand why, what's going on. And so that's what's happening in this particular trade.
Awesome. We spent 2 days on this. It's amazing, which is very good. Lots of good questions. Awesome job, Dima. Thank you.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Trade in peace, Chameleon. And just a note, Dee's been putting out a new video almost every day. I do put them in the email. Check the YouTube channel. Make sure you subscribe, because you get alerted when these videos come out. And they're
I try to put out shorter videos, just kind of looking at one, how to look for this or that, or how to. I'm trying to make them shorter.
Yeah, they're awesome.
Yep.
Awesome job, Dima. Thank you.
All right. Thanks everyone for joining. Stay safe out there.